Hey there, and welcome to Real Investment News. I'm Mike O'Neill. As we mentioned in our last report, the trade balance numbers just came out, and I wanted to take a closer look at them. The U.S. trade deficit, which is the difference between the cost of goods and services we bring in versus what we send abroad, has actually increased to $56.6 billion. This is actually an increase, even though it's going downhill. And that was in January, and that was higher than the $55 billion that was expected. The number has actually been increasing for the past 5 months, and we actually haven't seen these numbers since, well, October of 2008. When you split this up, the deficit for physical goods was actually $76.5 billion. In services, which includes things like financial and informational management, we actually had a surplus of $19.9 billion. Now, let's break it down by country. We have trade surpluses with Hong Kong, South and Central America, and Singapore, but our deficits are much bigger. With China, it's $35.5 billion, $15 billion with the European Union, and $6.3 billion with Germany. And we have deficits with our NAFTA partners too, $5.6 billion with Mexico and $1.5 billion with Canada. Now, with the surprise resignation of President Trump's top economic advisor, Gary Cohn, there is no one in the White House that is really pushing back against the president's plan to impose tariffs on steel and aluminum imports. The president says it's a matter of national security, but most economists and even members of his own party are opposed to the idea, which they say may spark a trade war. So, are the tariffs a good idea? Now, Michael Lebowitz, an analyst for Real Investment Advice, takes a look at the last time that tariffs sparked a trade war under President Herbert Hoover. It came after the Great Depression, and he enacted the Hawley-Smoot tariffs. Hawley-Smoot, I've heard that name before. Where was it?
Anyone? A tariff bill, the Hawley-Smoot Tariff Act, which...
That's right. Thanks, Ben Stein. Okay, so the Hawley-Smoot Tariff Act, it actually went into effect in 1930, and by 1934, imports and exports were reduced by 50%. Many scholars believe that this is actually what made the Great Depression even worse and even longer. So, how will President Trump's tariffs affect our economy? Lebowitz notes that by putting new tariffs on foreign goods, well, it might mean that foreign creditors are not going to be as generous. That means higher interest rates would be needed to bring in new sources of capital, and, as we have said in the past, raising those rates could be harmful to our highly leveraged economy. Up until today, investors have been treating the tariffs lightly, but with Cohn gone, they are getting worried. You can see that in the markets. Now, as always, you can read more of Michael Lebowitz's analysis on realinvestmentadvice.com. But in the meantime, thanks for watching. Be sure to follow us on Facebook and Twitter. Subscribe to our YouTube page. We have new videos coming every day. I'm Mike O'Neill, and we'll see you again in a couple of hours.